Okay, gang, let's get rolling here. Let's go take a look at some higher time frame analysis. And to do that, we'll go to a 240 or a daily chart. Let me go grab Okay, let's pull this guy over. All right, so I've got a daily bar up. We're going to take a look here at crude oil, and then we'll walk through this. I've got my new swing DSR set up on here, modifying that, and just about done with this guy. Going to identify historical swings as well as our current swings. So crude oil, after a pullback, we see a beautiful ABCD termination point right there. So this is a great example right here, gang, on directional movement. Market declines right here. We put in a double top with this one spike high right there. So we go overbought, higher low, retest with bearish divergence here. We gap lower, pull back down, we make a new structure low. Now watch the symmetry. From the swing low here, we drive to this high, pull back to this higher low, 338 ticks, and then I'm going to put this here and say if we had a perfect symmetrical AB equals CD, or one-to-one measured move, then where would the market go? We project right there to the 103.30s. The market goes to 104. So we basically double top right here at the 104 handle, 103.80s, about 50 cents through that ABCD projection. Then as the market's setting up here, we take this retracement leg, say, okay, if we got the same retracement here, then where would we pull back to? That projects 170s. The market came down to 135s. So pretty significant area right here. If this leg, which we've seen once, twice, produces 3 times a lady, then we've got 3 drives to a top right here. Now let's do our Fibonacci projection. We'll go grab the fib extension. I'm going to take the current static swing from this low inverted back to this high. Let's pull this guy down. Okay, so we'll come in and we'll pull in the 1414 Fibonacci extension. That'll be near that AB equals CD area. Then we'll do another Fibonacci extension from the previous swing. We'll go from the swing low that preceded the drive to this new structure high, pull it back down, and we'll start to see a point of confluence. The 127 fib extension of this leg up is going to come into play right at the 1414 extension of this guy right here. So let me be patient while NinjaTrader decides it's going to allow me to see the actual variables and then turn them on. There they come. Okay, so now that's a beautiful point of confluence. So we've got 127 fib extension of one leg, a technical Fibonacci extension. I inverted the most recent static leg right here where we've got a 1414 Fibonacci extension. And then it's a potential 1, 2, 3 times a lady to a top. 3 drives to a top. So if we can rally back to this level and take it out, then a drive to this 105.60 to 105.80 level, high probability, and I'd look for aggressive short signal there. The other thing is, this guy right here from our current trade, basically 102s, you see that our prior swing highs, 235, if we trade above, close above, highly likely we'll get the move to 104. This market's trading $1.20 a day. And so it would only take a 2 ATR move to get us right back into this area. Okay, so crude oil right now, intraday 102.35s. From our current swing lows, let's pull in right here. Those of you that are relatively new, left click to show data box. Let's take a look at the lows of the session so far, 101.18. Add $1, that's 102.18. Add 20 cents, that's 102.38. So 100% ATR move would put us right at the high from 2 or 3 days ago. So we'd have a 100% or 120% ATR move at previous resistance. And we've already seen some pretty good directional movement right here, basically 80 cents, 85 cents. So right now we're at about 75% ATR. All right, S&P. Now again, we come from the same context. We just roll through different charts. So here you'll see not only historical swings, we take a look at our DSR indicator. Okay, this not only is going to plot higher highs, higher lows, but it's beautiful for training your trading brain on how to identify swings and directional market movement. Yeah, I just got the updated indicator 2 days ago with additions to it, and so I'm going to continue, and then we'll get this out to DST owners. So here was a swing high here that preceded the decline to this new structure low here. The market came to a new structure low after a beautiful symmetrical triple top. So right there, gang, is a beautiful pattern. Look at that pattern, take it in. We started with an extreme overbought condition, and then we went double top right here with bearish divergence. From the 1877s, we pulled back 1835. We rallied back to retest this level again with bearish divergence. You can see the triple top here. Also, you can see very clearly a W top. Okay, expectation over here on the right side. We get a qualified signal, sell them. We'd anticipate a move back down to retest the 1834s, this previous swing. And you can see that that's approximately 180 ticks in the S&P 500. We pull back, we retest it almost to the tick, stop on a dime, rally back up right here for a 2-day move before we break below, close below, and make this new structure low right here. So here was the swing high that preceded the drive to this new structure low. This is similar to a 2618 pattern that I've taught for over a decade. So after we make the new structure low, outside return lower high, not only did we hit the 618, but we also hit the 786. On the shorts right here, with that 2618 pattern, our stops have to go above this level. Okay, now again, that's the June contract, not the continuous contract. So I would probably lay stops in at 0150s. And we'd look for a retest of the current lows or a new structure low targeting the 127 Fibonacci extension. So when we take a look at this, it looks like if I sell the 618 retracement, then place my stop here, that represents a unit of risk. If I sell the 618 retracement, take a position off on a retest of the current low, that represents a unit of reward. So right here I've got risk, reward for the first half of the position. So you can see that the reward line is longer, taller than the risk line. So it's typically about a 1 to 1.5 risk-reward ratio. If the market were to roll back down, attain target 1, then the stop would go from here, and it would trail aggressively based on the fib dots or some other indicator down to here at a minimum, and then we would look for this market to extend the sell-off down to the 127 extension as a minimum. So you can see from the initial risk, let's just call it 61 to 1900s or 40 points, to the target, 1860, down to 1780s is 80 points. It's a 1 to 2 risk-reward ratio. Okay, so that's S&P 500. Now let's go take a look real quickly here at the Dow Jones. Yeah, nice break of structure there. Dow Jones came back. We broke the swing lows here. swing low, swing low, swing low, sweet chariot. We go new structure low. We do not get the lower close, unlike we just saw in the S&P. And we don't have the clearly defined triple top right here. Okay, so this is not a 2618 sell. In fact, what we have here is a one-to-one measured move that drives down. It's an ABCD termination. We go from the swing high to this low, outside return lower high here, then this leg down right there duplicates itself perfectly right there. Let me expand that. The black on black's a little hard to see. So you can see it's perfect. AB, B to C. Where would AB equal CD? Boom, right there. Now again, no extreme reading on relative strength. This guy's trading 128 ticks a day. And then finally, let's go take a quick look at gold. We'll look at the current contract in June. All right, there's our gold. Let's tighten this up, gain some higher time frame perspective. So you see we drove right to a 127 extension. The market came down right here. We put in a beautiful double bottom prior to the turn. Now, I can take the swings off so it doesn't disrupt price quite as much. I can remove the text if I'm not interested in seeing the value of those swings, so we can gain perspective on the size of the swings. And then I can also remove support resistance. Okay, so if I come back in here, I can put the text back on, look at the swing values. I can come here, identify the swings if that helps visually. So as we drove higher, you can see we went from a swing to a new structure high, followed immediately by the anticipated higher low. We then retested the previous swing high and then went to a new structure high, higher low, new structure high, higher low holds. The previous swing high holds right here. We go to a new structure high. We anticipate a higher low, but it continues to fall. Boom, new structure low, followed by the outside return lower high. We retest the low, make a slightly lower low here. We do get a lower close. Actually, we gap down and open lower, and here is the current lower high. Now, if I want to use fibs, it's easy to come back here. I take my swing low that preceded the drive to this new structure high, and then I can come here and grab the value of this A to B leg right here. The market went from the A to B, B to C here. Where would this AB equal CD here? So this could set us up for a massive ratio trade buy around the 1220 handle. Right now, obviously, we're trading sideways. We've got support. We gapped lower with the open 3 days ago, 1270s. We've got a previous swing high 2 days ago, 1305s. Okay, so right now, gold kind of in no man's land. We've got the swing high here as you look left. There's an 05. There's a 1305. So I've got interest in selling the 1305 handle. If I'm a swing trader, I'd look for a retest of this low right here, 1270. That's a $35 move. And then my extended targets would be 1226. The other thing, obviously, we could look for a test of this level. We could look to buy GLD puts. Okay? So I'm going to lay a level out. 1305 is an area of interest, or a key price point, we call it, in gold. So if gold rallies to 1305, then I look for a qualified buy signal. Use the sell signal, and then I use the sell signal to participate in the short. All right, gang, real time here. Had a beautiful trade on. Our trail stops were taken out right here in the NASI. Okay, so NASDAQ went all flat. Nice winner there. You can see now NASDAQ making new structure lows. Now what I'm going to do here is I'm going to take our 150 tick. I've got the CL 150 tick indicator, template applied, which is relative strength. It's the IS over. It's the dynamic support resistance. Okay, I'm going to take the support opacity. We'll go to 2 and 2. The swing strength is set to 8. Support resistance, I'm going to go 3 and 3 here. And then I'm going to take my chart to a 233 tick. My time period, I typically use 4 times. So we'll go to a 932. Left click OK. It'll redo my DSR levels now. Yeah, DSR, dynamic support and resistance. Now I'm going to take the chart to a 233 tick chart. Okay, so we've got a DSR support level down here, 35.35s. All right, S&P 500, interesting chart here. You see that we double topped. We just retested that DSR level. Market's pulling down right here. So those of you trading our Go trade, looking for the move back to around 1867s. All right. Yeah, I'll put the range trader on this.